In the metals quadrant, taking a look at two straight sessions higher for the December gold futures contract after a small sell-off, where 4 of the last 5 sessions had lower closes. The gold chart's very interesting because over the past 13 sessions, gold has essentially gone sideways and showed almost no sizable jump in volatility. The high today, 25.54, up 1.11%, and the low today, 25.2370. That was only down 9 basis points, so just short of 0.1%. We're going to finish the day today up right around 0.75%. A lot of this today feels a little bit like a flight to safety as risk assets have had a weak couple of days, and the VIX has remained elevated, hitting a high of 23.3 and still sitting up at about 19.9, although it's come off obviously from that high. The Nasdaq is down 3.1% in the last 3 days and 4.5% since August 21st, and Bitcoin has dropped 17.3% since July 26th. During all of this, gold has remained within striking distance of its all-time highs. So that looks like a flight to safety, despite us not having this massive rally that most people associate with a flight to safety when it comes to gold. Also, we're in the midst of a yield drop in the U.S., double digits across the curve for this week. The 2-year yield is down 16 basis points. So far this week, the 5-year is down 17, the 10-year is down 18, and the 30-year is down 18. Lower yields tend to boost gold prices because it tends to weaken the dollar, and that's sort of the three-headed monster that's supportive of gold. You have lower yields, you lower U.S. dollar, and an easing Fed, or at least a Fed that's expected to ease. And as of today, the CME Fed watch list 225 basis points of easing priced in through September of next year. That seems to be bullish for gold, all else equal.